June's intense macro tightening has suddenly slammed into reverse. July 2026 is shaping up to be the month that completely rewrites the second half of the year. With a historic jobs miss shattering the hawkish consensus, gold launching a major defense, and crypto flushing out leverage to map out a true structural floor, the game board has shifted. Here is your definitive blueprint for July. The macro narrative this month is entirely about a sudden economic downshift. The late-week non-farm payrolls report completely blindsided Wall Street, printing a dismal 57,000 jobs against expectations while shaving 74,000 off previous months via revisions. This Wednesday, July 8th, the release of the FOMC minutes will expose how fractured the committee really is underneath. If the upcoming July 14th CPI print confirms cooling inflation alongside this week's labor data, new chair Kevin Warsh will have to walk back his hawkish rhetoric. Gold has successfully defended its structural baseline, staging a sharp relief rally back up to $4,248 an ounce. After a choppy June correction that saw spot prices hit an intra-year floor of $4,170, the disastrous jobs miss sent rate hike probabilities off a cliff, breathing immediate life back into precious metals. Technically, the immediate hurdle to watch is the second resistance line at $4,348. If bulls can cleanly slice through that, analysts like JPMorgan believe the macro path is fully clear to target $6,000 by the fourth quarter. For equities, July brings the ultimate reality check: corporate earnings season. On July 14th, banking titans JPMorgan Chase and Goldman Sachs kick off the Q2 reporting cycle. Institutional allocators will be scrutinizing credit defaults and investment banking margins to gauge the exact damage of the Fed's prolonged hiking posture. With macroeconomic data cooling down, equity upside is capped for over-leveraged growth names. True alpha this month will hide strictly in high-yield defensive sectors and quality value plays. In crypto, July is testing the absolute limits of investor conviction. Driven by a record-shattering $4.5 billion pulled from Bitcoin ETFs in June, BTC enters the month fighting to hold the line at $59,500. On-chain data shows the exchange whale ratio spiking to a high of 0.69, indicating large capital is shifting positions behind the scenes. Expect choppy consolidation between $56,000 and $62,000 until the Fed meets at the end of the month. Until Bitcoin firmly patterns a bottom, altcoins will remain highly suppressed. Finally, the energy complex has completely deflated its geopolitical risk premium. WTI crude oil has broken sharply lower, now trading down at $68.08 per barrel. Breakthrough diplomatic progress between the US and Iran in Doha has successfully reopened the Hormuz waterway, pushing global crude supplies to over 103 million barrels per day. This drop into the upper 60s acts as a massive disinflationary injection for the global economy, providing the exact macro cushion the Federal Reserve needs to justify changing its tune later this quarter. That is your July 2026 trading playbook. The macro game board has completely changed, technical ranges are resetting, and the data is pointing to an explosive second half of the month. Lock these 3 critical dates into your trading setup. Make sure to save this video, subscribe for our midweek technical breakdowns, and drop a comment below. With jobs slowing down, are you buying the Bitcoin capitulation or riding the gold recovery? I'll see you on the trading floor.